And it's time for the word on Wall Street. Top investors watching your money. Joining me now, UBS Private Wealth Management Financial Advisor Sarah Ponczak and Verdant Capital Advisor CEO Leo Kelly. Guys, good morning to both of you. Maria is going to join us in just a moment for this discussion. But let's first start with a look at futures this morning. We are looking at a higher open this morning. Dow up 34, S&P up 9.25, NASDAQ up 45. A lot of earnings. We just got Coca-Cola. We've got CPI out today. Here's Coca-Cola right now. Stocks up about 1%. Fourth quarter numbers did come in line. Earnings per share, they beat slightly on revenues. That's one of the stocks that we're watching right now. We're now looking ahead to Cisco. We've got Kraft Heinz out tomorrow. Sarah, your reaction so far to what we've heard from a lot of these companies, because in particular with Coca-Cola, they just told us that part of the reason that they did have the profits they did was because they raised prices. Inflation is still the story as we wait on CPI in the next hour.
Inflation is still the story, and today is a very large day on Wall Street. As you just mentioned, we are waiting CPI data, and over the last couple of months, we have seen disinflation, which has been noted by the markets, by investors, by central banks, and certainly Fed Chair Powell over at the Federal Reserve. But back to your question on earnings, this has been a theme all through the season. And if you look as to where we now stand at the tail end of the fourth quarter earnings season, S&P 500 earnings are on track to have declined by approximately 5% or so. And in large part, this has been because of crimped margins. Companies have had to raise prices, and that has dampened some consumer demand, as we've heard many companies say. So the reality is that this is likely the start of an earnings recession, and we are going to see this continue going forwards.
Yeah, you know what I want to ask you guys about is Lael Brainard, because, you know, she's the top pick. She's going to be joining the Biden administration as head of the Biden Economic Council, Leo. And I think markets see Lael Brainard as a dove. Right? I mean, you know, she was competing with Jay Powell to get the chairman of the Federal Reserve job. And people feel that, you know, she was the one who was going to stress cutting interest rates, not being so hawkish with higher interest rates. The Federal Reserve in the middle of its raising rate campaign right now. Will markets rally on the Lael Brainard news?
I don't know that Lael Brainard is enough news to rally the markets. She does have a history of actually being both hawkish and dovish over her time. So I'm not sure that's a guaranteed dove. And I think in regard to that, Marie, you have to look at the consistency of messaging from all the Fed governors over the last few months. While we have seen inflation numbers slowing over the last quarter, the reality is they've all been revised up. And while M2 has slowed down money supply, there's still an enormous amount of money in the Treasury's general account. Loans at banks are up. I don't think we're out of the woods on this inflation thing. So I don't know that Lael Brainard can be dovish. So I don't know that the markets will react so favorably just to that one announcement.
Well, I mean, one thing we're going to be looking at today in the CPI is wages, right? We're watching wages that continue to be so tight, even in the face of layoffs. So Twilio becomes the latest to announce layoffs today, cutting 17% of its workforce in an effort to spend less, be more efficient. The stock is up 2%. Yesterday, it rallied on the news. So you've got jobs still plentiful, even in the face of these cutbacks. How do you look at the employment picture right now as we await this CPI number this morning, Leo, and focus on wages?
Well, jobs are going to go with earnings, and earnings are actually starting to accelerate downward. So I do think that this is the last shoe to drop before we can come out of this. We're actually starting to become more constructive on the market in the next 18 to 24 months. But we've got to get through this next phase yet. We still have to lower monetary supply, and inflation is still not given up yet. So I do think earnings keep coming down. I don't think we can forget there's been so much capital thrown into the system. There's still so much money flushing around in the system that these jobs are still holding on. Consumers are still showing strength. So this is the next piece. I do think the job market gets weaker. I don't think it gets as weak as it has traditionally gotten in recessions or as you're going into a recession. So,
Yeah.
yeah, I think that's the last shoe to drop, Maria.
Yeah, and real quick, Sarah, the Journal this morning writes where inflation lands depends on three things. And they go into goods, rent, and core services. Rent is still elevated as well. You look at food and you look at rent, those are the two areas within the CPI that remain real hard to reverse course.
You're right. And on the headline level, it is very possible that we actually see an increase month over month in headline CPI when the data drops at 8:30, partially because gasoline prices are higher. Food and gasoline prices are very volatile, and also because of services, as you mentioned. But again, we have to focus on what's going on structurally that's really driving inflation. You and Leo were just talking about the employment picture. The reality is the unemployment rate is still at 3.4%. That's the lowest since 1969. And with a very tight labor market, while that's great for people and for jobs, that's not so great for the Federal Reserve, who's trying to get inflation back to their 2% target.
Yeah, great point. All right, we will leave it there. Great word on Wall Street. Sarah, Leo, good to see you both. Please come back soon. Thank you so much. We'll slip in a short